a majority of people that I've been in touch with that are high performers and high earners, I can out earn the problem. And
Mm.
you may be confident enough to out earn the problem. That doesn't mean we solve the challenge at the very beginning, which is that money mindset.
This is the Passive 25K podcast, a podcast built around the vision of creating wealth through passive income for ourselves and others. The idea of creating income while you sleep seems like a dream come true, but for most professionals, turning this into a reality is a different story. On this show, you will hear real people breaking passive income streams down to the basics, giving you the next steps to start your own passive income journey. If you're new to the show, my name is Kyle Reedstrom from Fargo, North Dakota, where I get to work with my team of agents and investors each day to complete our goal of $25,000 a month in passive income. Now, let's get right into our next conversation. This is the Passive 25K podcast with Kyle Reedstrom. We are the home of Passive Income University. We help working professionals with one source of income start and complete their passive income journey. And I want to share a quick story before we get into it. We had one of our members buy his first investment property this week. He's getting close to closing. Super excited, super scary. But guess what? We went through due diligence. As part of the community, we were able to go through all the steps and also give him resources in our modules and our training in our commons and our community online for property management and prep around that because it's going to be self-managing. So super excited. Brett, giving you a shout out. But that's what we do in our community at Passive Income University. Find us at p25kg.com if you're looking for next steps. Today, I get to have the pleasure of talking to my friend Matt Drinkhahn, episode 31, about creating abundant money mentality. Matt, thanks for being with us, man.
It is a real pleasure. I love what you're doing. And congratulations, Brett. Man, that must feel good to get off the bench and get in the game. And it's just a start. So excited to hear more stories like that, Kyle. So just congrats to Brett and pleasure to be here today.
You know, and we get to talk about a topic, Matt. We were talking off camera a little bit. This is interesting because we're talking about money. Money is high highs, straight up terrifying for a lot of people. Matt, before we get into this topic, which I'm excited about, I want you to give the audience a little intro to you. Matt, you're a businessman, you're a coach, you're someone who advises major performers at a high level, C-level executives. Give our audience an idea of who you are, your credibility, and maybe your credibility around this topic of money.
Great. I look forward to talking about me for about 1 to 2 minutes. Just give you the background. And I hope this builds a little bit of rapport with the audience that I come from a working class family background. My mom was an English school teacher. My father was in the military, in the Air Force. And when they got married and they had me in 1977, my mom retired from teaching and she became a stay-at-home mom. And my dad was in the military. So we moved 17 times in 21 years growing up at home. And in that time, we were never in the poorhouse, meaning we always had food, we always had shelter. And I also grew up with thrift shop clothes. Also grew up, but never the name brand stuff, always secondhand stuff. And then I remember very distinctly that when I went to college, and when I say I went to college, it got paid for by a scholarship because we didn't have the money for me to go to college. So thank God I had a scholarship and only had to take on about 25K in debt over the course of that 4 years. So about $6,000 a year. Right.
Wow.
So I was very fortunate in that regard, not to have all that debt. And my dad, he was passionate about his military career. But the thing that really resonates and why I wanted to be on this show and share the story with you is that my father, he wanted to supplement his income. And he eventually ended up doing so by starting a side hustle. And his side hustle was actually very active. It was not a passive road to 25K. It was an active road through multi-level marketing is the way that he sought to make his fortune on the side. And it was through selling Amway, which is a popular company way back in the day. And it's the one that may have, depending on your angle on it, may have been the one that soured you to multi-level marketing or gave you a great opportunity to it. Either way, he tried it that way, taught me a bunch of lessons. They never made it big time in that. But that opened up the idea to me that you can do something on the side, or you can find a way to build passive income by having something out there. something, whether it's a distribution channel of something, or whether it's, for example, rental properties. So that's a little bit about how I grew up and all the way through high school. Now, professionally, now, here's a little bit, maybe this helps the credibility. Opinions may vary, but I would share that right now I'm 46. I've been in business for 25 years. The last 9 years I've been an executive business coach. What does that mean? What that really means is that I help recovering perfectionists and highly functioning workaholics keep things simple and scale their businesses. And the types of people I work with right now are that like really strong A personality person that others may not approach because they're kind of scary, kind of very, very confident in their demeanor and delivery. And I connect really well with that person. I connect really, really well with the fiercely independent person. They might have a company with 5 employees at a low end, maybe a couple hundred employees on a high end. They might be somewhere between a few million in revenue to a couple hundred million in revenue. They could be in one location or across the country. Even a couple of them have locations overseas. But it's helping them to build their companies and their culture at scale. And I've been doing that now successfully for about 9 years. And why? So here's why am I qualified to talk about passive 25K income on your show? Well, because you're my partner at Front Row Dads events, because we are committed to being the best dads we can be. So that's one part personally, is that I am a family man with a business. So I have 3 amazing daughters who are 7, 6, and 4. And I have a wife, by the way, I really married up. She's way out of my league. She's like super hot. And, I mask my big nose by being taller than everyone else and having big straight teeth, which my parents did pay for. Right. But I've have a wonderful, amazing family, so I lucked out there, and, part of the Front Row Dads group, part of a group called the Tribe of Investors who work on, passive real estate, passive debt structuring deals through private equity, passive deals in the radio and music industry, all kinds of deals that we invest in. I'm a part of the Exchange community, which is a facilitation community for online facilitators, run by John Berghoff and Steve Bouchard and Adair Cates. And most recently, I'm a member of Dustin Reekman's podcast accelerator group, which we get together. It's a large group of us get together and we work out how we can get a message out to the world through podcast guesting. And I just started that. So I don't know if this message is going to resonate or not. Hopefully there's a nugget of wisdom out there for your audience. So that's kind of where we're at right now. And yeah, I kind of forgot what the question was, but I believe that it's back to you, sir.
No, I love that, Matt. And you said you definitely have seen, I would say this, and correct me if I'm wrong, Matt, you've seen some different sides of the spectrum. And you even said like, hey, some of these A personality players, I think of a lot of people that are listening to this, people that I know in this world of creating extra income streams that are motivated, they're business owners, they're go-getters. And in my head, I always think, well, they must be good with money, right? I even have people that have the perception sometimes of like, Kyle talks about money a lot, so he must be very good with money. And you know what? I love being in business. I love entrepreneurship. I love the game of it. But I also like to spend money, And I like to talk about the big 4: making money, spending money, saving money, and investing in money. And so all of these things I wanted to say to you, Matt, what's your take on this? You've seen some of these people at high levels in business. What is their mentality around money?
Whew, man. So what I just heard is I heard you just ask, in my mind, I just framed it as 5 questions. I'm going to cover each one of them. So the first one is the mindset of money when it comes to, CEOs or big professionals. And people have this mistaken thought that because someone makes a lot of money, that means that they're just swimming in cash and they are super rich. And just because you make a lot at the top end does not mean that you have a lot. And this is evidenced by I can't give you an exact percentage, or I'm not comfortable sharing an exact percentage, but let's just say it's well above 50% of the executives or leaders that I've had the privilege over time to meet and coach and work with. They make a lot of money. And I don't know if all of them actually save a lot of money. because there comes this place that when you're making so much, you've got to keep up with everyone else. This may be the most cliche, overused phrase, keep up with the Joneses. And it is that way. Anytime you hear someone use a phrase that is called cliche, just instantly pause, get your antennas up. There's got to be some truth to it somewhere. What might that be? Just scratch your head, go a little bit deeper when you hear cliche, because in this case, there is a lot of truth to that. Keep up with the Joneses. Some people, especially in America, are infected with this idea that I've got to keep up. And you make 5% more, you make 12% more, you have a breakthrough year and you get a big raise. And before you know it, you spend that raise to either pay off all the debt you had from credit cards that have been building up, or you know what, I've earned it all these years, so I'm going to take a big fancy $12,000 vacation to Disney. And before you know it, that $12,000 you just spent on Disney, that was actually a $20,000 raise after taxes and any other small inflation accounting for. Now you just spent your raise and you're back to where you started from. But people don't think of it that way. They don't think of it that way. So I would be just very hesitant to say that because someone makes a lot of money, that means they have a lot of money. Yeah, I cannot agree with that. I until I see it, I'm going to make the assumption that everyone out there is on an even playing field. I don't care what kind of, if they're wearing these $700 shoes that I saw yesterday on Twitter. I mean, I know a lot of people that have cars that are six-figure cars. You can't freaking afford anything because they're so leveraged to the hilt with debt.
Well, and this goes both ways, Matt. I know people that, by the standards of what we're talking about, don't make a lot of money per se, but have great wealth. Have been great stewards with their money. And it's just like, man, it's not what you make, it's what you keep. It's a very good point. I want to keep you to keep going.
So the point was around the money mentality. Don't judge the book by its cover. It's in the thinking and the habits that determine how we are able to accumulate wealth and save money. It's not in just the top line, how much we earn. So that's one thought. So the four things: making, spending, saving, investing. I'll start with spending. And I'll speak from personal experience. So actually, I'll go making and spending because they went hand in hand for me in my 20s. So I made millions in my 20s and I spent every single penny of it and more. Think about that. I made a lot of money in my 20s and I spent all of it and came out of my 20s owing a significant tax burden that I wasn't even aware of because I was naive and I thought that I would out earn everything. This is the mentality of a majority of people that I've been in touch with that are high performers and high earners. I can out earn the problem. And you may be confident enough to out earn the problem. That doesn't mean we solve the challenge at the very beginning, which is that money mindset. We don't have to out earn the problem. Let's go to the source and fix the problem, which is our mindset around money. So as far as making and spending goes, I would say that I've made a lot and I've spent more and made a lot of mistakes, a lot of mistakes. So that was the first part of it. Now, as far as savings goes, I'll share one little savings tip that I learned firsthand from my father. And when I was born in 1977, father came from a modest background, a farming community. They never had money. They were rich in love. They had a great family, very tight, very close to the community, very close to their church. I mean, they had a very tight community. They never had any money, right? So I would say that the best advice that I got from my father is still true to this day. He got this from a financial advisor. One of the reasons about 30% of my coaching clients are financial advisory firms is because I really respect and admire what they do. Someone in 1977 had a conversation with Mark Drinkhahn, my dad, and no one had ever had this conversation with him before. No one in his family, no one on my mom's side. My mom's side came from trauma, abuse, and welfare, so we're not even going to go on that side. They definitely didn't have any money. So we'll go to the dad's side. On that side, the financial advisor had a conversation and invited him to do two things. Number one was to start saving 10% of every paycheck and living from that. That's number one. That is, maybe that's a cliche. Maybe that's something that a lot of people talk about. Not many do it. And he did it. He did it. Even when he's making $18,000 a year, even when he was making as the highest paid person on the base, making $50,000 a year in the late 80s and early 90s. You know, and he finally, I don't think he ever got to the six-figure range. I know he got to the 90K range at some point. He was still saving 10% a year, 10% a year, 10% a year. Right? So on every check, That's number one. And then number two is he was invited to invest in whole life insurance, whole term life insurance, a whole life policy. And that might have a bunch of different people that sell that nowadays, and it comes in a lot of different ways. But he invested in that too.
Hmm.
So a man that never on the scorecard on the front end made a lot coming in, he when he unfortunately tragically died at 58 and a half, a clean bill of health on Memorial Day of 2005, when he passed away, not only did he have more money than anybody in the history of the family because he'd been saving, right? The life insurance policy put it over the top, and it helped our family go into a different classification like overnight. Something he didn't realize when he was living, but he really helped us to, skyrocket to a different place that we'd never known before with an extra comma in our net worth. And I'm very grateful for that planning and the foresight he had to have someone give him some advice back in 1977, because he was a
Wow.
strong type A personality. It wasn't easy for him to take advice or to listen for feedback for others. And he didn't have the financial education or acumen to understand how to do everything. And he was a smart man.
Hmm.
He still got a mentor and still took advice. And it was from a financial advisor who gave him those two pieces of advice. And he did it. And that really kicked us off in the right place. So
Wow.
pause for a second.
Matt, thanks for sharing that story. And I can tell, I could just feel the weight of importance. Like that money decision had a massive wave of impact. And so many people that listen to this podcast that are in this world of wealth building or creating generational change around money and creating income. We always get excited about a property that cash flows $250 a month, because that extra $3,000 coming in year after year in perpetuity after an asset's paid off, and after it's paid off, it's greater. I mean, this has a huge ripple effect, and that's just one, right? And what I loved about what you just said, and I think I want our audience to really take away from that story too, is there's certain opportunities in money, in the situation of money in our life, where we get to pre-decide. Like, we're in a place where we're not sitting at the precipice of spend or, not spend or save. We're sitting here talking to a professional, or we can make a decision, a small one now that continues to carry on for a long time. Like 10% it's a lot. It's substantial, but it's not everything, right? But deciding to have that automatic withdrawal month after month, year after year, the compound effect, that's such a cool thing. And using pre-decisions in money is so powerful, man. So powerful. And I also love that you said, everybody out there, like even after this podcast, even us on this podcast, everybody's kind of trying to be an expert at this because we have to deal with it all, that we have to make it, we have to spend it. So it's like, how much do you spend educating yourself on it? We all didn't get a PhD in money. In fact, they don't teach much about money at all in school. And so knowing your who's, not how's out there, like a financial advisor, and saying, hey, what if I decided to really work hard, not understanding money, but understanding a partnership with somebody that can really guide me well in that? That's huge. And it really sounds like it paid a lot of dividends for you and your family.
I feel it did for my father in that example. And I'd love to fast forward to another example of the fourth category, investing. And this was important for me personally, because I remember that come the start of June 2008, June in 2008, in about a 2-month period, a little bit less than that, about a 6.5 week period. In that time, our family net worth went down by 75%, because we all had all of our eggs in one basket. And it was all in the stock market. And I remember in that time that it was stressful, because when you had worked hard to save all of this up, and then it all suddenly goes away, or it goes down to a significantly smaller number, the instinct for many people who are self-investing, oh, I'm going to just go invest my money in these funds. Okay, so the funds go down, you lost 75%. The common thinker might be very emotionally attached to that. And they might say, man, I got to get it out before I lose it all. And then they take everything out. And that is why we need a financial advisor. Because if you take it all out when it's down there, then in order to take that money back to where it was before, it's not quite the same game. Now I've got to quadruple the money that I have if I take it all out, as opposed to just set it and forget it, as you hear in the infomercials. I like to park the check. I don't even know how much might be in some of these financial advisory accounts. And it's not because I'm just swimming in money. It's because if I'm looking at it every day, I'm getting emotionally attached to it and stressed by the up and down of it. So I don't look at it, but for annually. I remember if I would have looked at it right when COVID started, 30 days into COVID, and managing your own money, I bet you a lot of people just said, I'm scared, terrified, I'm going to take all the money out. About 28 or 29 days in. If you would have done that on day 32, then you would have kicked yourself when the market rebounded right back to where it was. Right. So anyway, that's why a team of professionals is important when it comes to investing. And yeah, there's fees. And I've read Tony Robbins' book about money, the game, and I get all that. And I don't like fees any more than anyone else. In the absence of doing it myself, which I don't want to do it myself, I have a team of professionals that do it for me. And I'm happy to pay them that fee when I can learn from them, get the education from them, and they can show me how they're doing it. So that's part of the investing game. Here's another part. For those of you who might be on the bench and who are anxious about investing, or you want to get started, and the first step is oh so challenging. What do I do? What's the first step? I can share with you a very personal story that I haven't shared much in public. I'll share with you now. I remember there was a time in December of 2021. I was talking to a friend of mine by the name of Eric Van Horn. And Eric said to me the following. He said, Matt, if you have the money in the bank, then if that's your only way of growing it, then you're a loser. I'm like, what? And he knows how to trigger me. He's like, what do you mean? He said, well, if all you do is just keep cash in a savings account, yeah, you might be accumulating a lot of cash. Cash is losing value to inflation, to whatever other costs out there that we don't see that are happening every day. Your money is actually losing value if you just sit in one place. If you have enough and you just let it sit there, that may have been the yesteryear idea. Keep it all under your couch. Keep it all in a safe under your bed. And you might not feel like you're losing. And I didn't feel I was losing. I didn't invest in the market from 2008 until 2022 January. I accumulated cash. And the only reason I did that is because I knew I wouldn't lose it in the market if I just kept it. And I had a substantial amount. I still didn't invest it. So in January of 2022, after I had this conversation with Eric, I decided to get off the bench and take that first step, that first investment after being on the bench for 14 years. Wow. I hadn't invested in anything. I had a couple small pieces of real estate, but that was mostly my wife that decided to make that investment. So I did not proactively invest much at that time at all. I invested on January 21st, 2021 into a mastermind group called the Tribe of Investors with Eric Van Horn and Justin Donald. And this group was no small price tag. Just to be a member of it to start was $20,000 just to get in the door. Matt, why would you pay all of that just to join a group? Because I knew that I had to put money down somewhere, somehow, some way for me to be in the game. I had read everything about passive real estate investing. I had read everything about crypto investing. I knew in theory about all this stuff from reading about it. I didn't actually take any action in investing until I put my money where my thinking was and I invested. And as soon as that happened, it's like the whole world changed for me when I made the first investment. And it was scary as hell. And that first investment to simply be a part of this group where I was going to learn tremendously from experts who had doubled, tripled, made their money many times over. Put the money into this group. And then once I'm in, literally within a couple of days, I made another investment of significant size more than that. Right? So that was my second thought in investing as I invested a second time. 2 more months into it, I made another investment. So here I am. I haven't invested in 14 years and I make a good income and I haven't invested. and I'm scared to talk about this with people. It's a privately held secret that I don't want to talk about. I'm comfortable in myself. I just haven't invested. It's not going to be a long-term strategy for success, most likely, because I will probably end up spending everything if I don't invest and have some way of making it passively, Kyle, as you know.
Mm-hmm.
So by July, I made the fourth investment. So in that 6-month period, I made 4 investments where I made 0 investments in the 14 years previous. And those investments have helped get me to a place where we are near, I'll say near, we're not exactly at 25K a month in passive cash flow, but we're right on the precipice of being there. And that was because of just taking the action to get in the game. So excited about that.
Dude, that's super amazing story, because I feel like there's relatability. Okay. Sitting on the bench, as you've said, but there's peace in that, right, Matt? Like for those 14 years, your mentality was, I can earn, I can put it away, and I can look at it. But what you just described, I really liked. You were a loser.
I know.
And that's not because it's not a derogatory term. It's literally because your money was losing value. So you were losing daily, you were losing. And it's not about winning and losing. It's just about being a good steward of these resources that we get. And so, I mean, did you feel that you made that move, Matt, because you were convicted by what Eric said? Do you feel like you had an expiration date on your, what rocked you to actually finally act, man?
2 things. And I go back to people motivation that we might have. People they're motivated by one of a couple things. They're motivated by fear, right? So they want to escape the pain. They're motivated by pleasure. I mean, I want more pleasure, and I want to do what's easiest. So if you can make it easy and make the path of least resistance, and I can escape from the pain and I can move towards pleasure, then that sounds like a pretty good deal to me. And we got into a place where right now at 46, I'm in the prime earning years of my career. And, God willing, our health stays well, I continue to grow and develop, that for the next probably 15 or 20 years, it's going to be very lucrative. It's an active income. It's an active income. And I am like many other humans out there. I have a couple of filters in place that allow me to save. I am saving a minimum of 15% every year because we do that. Still, I want to keep up with my own version of the Joneses, my own goals, my own dreams, and we're spending. And our lifestyle creep, as you might call it, continues to go up and up and up and up too, right? So I decided that first investment, if I lost it, it wouldn't be the end of the world. But at the same time, I had to do something, because here is my truth. My oldest daughter is 7. That means that in 11 years, if she's going to go to college, if there is such a thing as college in 11 years from now, and I hope that there is, and I love college and the experience was amazing on a number of fronts, and I hope that they have an opportunity to do that. But if I'm going to be helping pay for that in any way, if I'm going to be helping pay for any type of school in any way, for her and her daughter, her sister right behind her, and my other daughter, which is the year and a half behind her, I'm going to have 3 pretty hefty college tuition bills coming up. Plus, I have 2 sets of in-laws who are not all in great health. I have a mother who I love dearly, who's not in the greatest of health. I've got friends and people that are close to my heart that I know don't have a lot financially. And, I have some mental guidelines or barriers around helping everyone out. There are certain people I will probably, when push comes to shove, going to need to help out. So all of this is in the back of my mind. And I'm thinking, what am I going to do? Am I just working really hard for the next 20 years, this active income just to pay for college, just to be able to help out if there's a medical emergency, God forbid, which is probably, if I'm not mistaken, the number 1 or number 2 reason that puts people into bankruptcy or into serious financial difficulty is health stuff. I've had health stuff, Kyle. I don't know if you know this from our experience. I've had a debilitating spinal injury where I was in a wheelchair, and thank God I had a health insurance and it paid for majority of that. But if there's something that needs to happen that can't afford to pay for it, I have to take everything that we've earned and saved and pay for it. I'm not going to hesitate. something happens to my kids or my wife. So
That's
I've got to
right.
have a different strategy, because out earning it is not going to cut it. It's simply not going to cut it. So
Yeah, and
pain.
so much of this, so much of this is very real. It's tough. It's tough to hear sometimes, but man, digging your well before you're thirsty is a real thing with this money stuff. And I love where we went with this first half. We're going to take a little break, and I want to come back, and I really want us, you're a tactical guy, Matt. I'm a tactical guy. I want to get into really some takeaways, some tactics we can use to create that abundant financial mentality. So we'll be right back. Hey, wanted to take a quick break from this week's episode, wondering if you've been asking yourself the question, how do I get started in this stuff? Or what are the next steps? Or where are people that are thinking the same way I am, or that are already doing this stuff? People that are on their passive income journey. Well, we were getting this question a lot, and that's why we were prompted to create a community of like-minded investors and entrepreneurs that we call Passive Income University. This is a place where we have a library of videos of things we've done and ways you can educate yourself on the passive income space. We've brought in experts and had conversations of people that have done this, are currently doing this, and have completed certain parts of this. We have gathered a collection of tools, information, spreadsheets, checklists for you to use in order to continue on your journey in the passive income space. We are going to learn and grow together in order for us to start, take next steps, and complete our passive income journey. If you're curious about taking your next steps, check out our website at p25kg.com, where you can apply to be a part of Passive Income University today. We are back with episode 31, Creating Abundant Money Mentality with Matt Drinkhahn. Matt, our first half, we had a great conversation around what the heck is this money stuff and why is it such a dictator in our lives? It can be an amazing amplifier, or it can be something that's really holding us back. And we talked about how some high performers, even it can be holding them back personally. It can be holding their business back. And knowing your tactical nature, knowing my tactical nature, I wanted to get in and leave people listening to this episode with some real money habits, or even habits around creating the right mentality around this stuff. And you and I don't need to be self-proclaimed experts on this stuff. It's just two guys that are in it and in the real place with a lot of our audience that might have some things that we're doing, or some things that we've heard of, or people we've been coordinating with that are using some good habits around this, because I really want people to end up starting to flex that muscle to create healthy mentality around money. And so any tactics in your world, Matt, that you're using to kind of elevate your view and your mentality around money?
I'm going to share something with you, and I might get a little emotional sharing this. And for your audience, I'm going to ask you to bear with me and really do your best to play all in this exercise. Because if we have a mindset right now that over time has proven to not save money at the rate that we might want to save it, or we have a mindset right now that has kept us from investing or getting in the game, then I'm going to invite you to do an exercise with me. And this is not something that I made up myself. I read about it about 8 years ago when I got Tim Ferriss's book, Tools of Titans. And I remember him talking about an exercise called fear setting. And you can Google that and hear about the exercise, but here's the gist of it. I'd like to invite the audience to imagine, what's the worst thing that might happen if I don't change any of my habits around money right now? What's the worst thing that might happen? And it can be a painful exercise, and it's worth it if it will help to inspire change and help us do what we feel we want most.
Yeah, and I want
Which is
to
to
engage in this. I mean,
develop that mindset.
if I'm talking through this right now, and it is serious, because think about a situation where you lose your house, right? That you've created, your family, your home, right? It's not just a house, it's a home. That's taken away from you for some reason. you lose your job or your business, right? So that, and even that, the worst might be like that happens and then you're kicked out of your house, right? I think of a big fear of mine that I've heard of in the real estate world and I've read about is partnerships that get really cancerous, and lawsuits that happen around working in business with people. That's a scary thought, some of those things. And down that rabbit hole farther, Matt.
I can tell you something that really has me scared, and that would be that I, God willing, have a long life, and let's say I'm around 65 or 70 years of age, and I get to that point where it's time for me to, quote, retire, and now I get to live off this Social Security thing. The thing that I fear is that if I make it to that, I make it another 24 years to the age 70, and I'd worked hard my entire life, tremendous work ethic, and I had continued the spending that I'd had for a number of years, where I'd spent a dollar or two here or there, a few hundred here or there, and it all seemed so easy and simple. And I look at my bank account, and I've maybe saved $1,000 a year or a few $1,000s a year, and then one thing happens. One tragic, challenging thing happens, and it's something to do with health. I've already had health scares. I've already been disabled. A number of years ago, I'm getting ready to come up in the 7-year anniversary of when I had that spinal surgery that brought me back from being in a chair. So one tragic health thing happens and it wipes me out. And the next thing that happens, it wipes out every single thing that I already had. It's already gone. And now I'm in a place where I have to go and beg my kids for money if they have any, right? I have to go and beg for it somewhere. I have to be at someone else's checkbook, whether it's the government or someone, and I don't have any way to do that. And I worked my butt off for years and years and years, and gradually, one spending decision at a time, I had earned a lot and I'd spent a lot, and I don't have anything to show for it. And now I'm out. And I'm that person that was once a multimillionaire, made millions in my life, and I spent all of it, just a few dollars at a time. I don't know where any of it went.
Hmm.
That terrifies me, Kyle. And the reason it does is because I've seen people do that. I've seen that happen to people that are very close to me, who are leaders of companies and the C-suite of major companies, lose their job, and they were living so high on the hog that they lost multiple houses, lost all their vehicles, lost everything in a very short window of months, and were living off the charity of others. And I've seen the way that people look at them. And I've been in that place, honestly, where I was the judge of that circumstance. So from a place now where I'm not judging anyone else and I don't want to judge myself, I am terrified of being in that position. And
Hmm.
I know that the habits that I had when it came to making, oh, I'll always just make more. And spending, it's just a little bit here and there. I don't need to keep track of a budget and have a checks and balances on my budget, or of saving. You know what? I don't need to save this month. It was a huge month. I don't need to save right now. Or of investing. You know what? I don't need to invest right now. I'll wait just a little bit longer when the market's right, when the timing's right, when my education is right, when my kids get out of school. When. You can have one tiny error or one tiny maladjustment in every one of those four most important pillars that you shared earlier and end up at the age of 70 in that very fearful, lonely spot that I just shared. And it can be painful to think about. But I would go back now and you asked the original question of what's the tactic or what's the strategy that might help us to overcome that. And I would answer with, two thoughts. One is let's just get some small wins. Just get a small win, no matter how small it is, one tiny step. The question that might guide you, my friends, what's the smallest, soonest action that I might take to make progress in these categories? Just the smallest, soonest. How soon can I do that? Can I do it this week? Can I do it by the end of the day? Can I do it the next hour? Can I make a commitment right now? Take one tiny action that can help me make some progress towards these pillars. So that's the question I might use to help get small wins. Here's the actual action I'd invite you to take, my dear friends in the audience. I would invite you to take the action of, well, let's just say that it comes to, we'll go backwards in investing. Go backwards, start with that, and then saving, spending, making. With investing, I would invest in conversations with people who appear to have it. Why? Because everyone that you think has it, they have a story about how they got it. And most of these stories are similar, unless you inherited it, come from some type of trust fund. We're all like ducks under the water, swimming 100 miles an hour. We all made our mistakes and got our bumps and bruises, but we all have something that we've done right to get us to where we are when it comes to investing. And that investing could be investing in relationships and conversations. It can be investing in the market with the wise counsel of someone like you, investing in the real estate, and investing in passive income university. These are all tiny things that we might do to get us off the bench and taking action. Right? But what's that soonest, smallest step you might take to get small wins? And what's that one repeatable action you might take in each of your 4 pillars? And that might be where I would begin. So I'm heavy on having an accountability partner for this, because if you have this idea that you want to do it, but you don't share it with anybody, it's all it is in your mind. It's an idea. And our own constitutions sometimes can be challenged when we're put to the stress test of, kids and keeping up with the Joneses and spouses. That's a big one. Spouses. I'm just kidding, dear. I love you. Right. So I gotta throw a little humor in there. This is a serious subject. We gotta throw a little something in there.
That's very
but
good.
What's that one tiny thing that we might do in each of these pillars? I would ask you that question, Kyle. What's the one tiny, simple thing? That doesn't mean it's easy, as I say simple. But what's the one tiny, repeatable action that we might take in these pillars that can help us get there?
Yeah, and you brought it up earlier in the conversation that with money and finances, there's a lot of automation that can exist here. Even how we get paid, a lot of times how we spend money now, they try to get us on monthly subscriptions, right? Like that's literally trying to get you to not think, we'll direct deposit things into your account and we'll take it right out, your mortgage, everything. And so in Passive Income University, we talk a lot about a tactic that I love that has really been helpful for me called stealing from yourself. Because there are certain apps that you can use for the good that actually take money out of your checking account as well, but it goes into another bucket that you can't see or touch and you might not know is there. But after 6 months, 8 months, 10 months, all of a sudden it piles up just like your bill does for Amazon Prime, And so when we have people and Haley and I, my wife, have done this. When we have 3, 4, 5 apps, some to name are Capital with a Q, APITAL, Acorns. There's one called Stash that we really like. These apps are really unique because they'll take money from you automatically at the rate that you like, and then they'll invest a lot of it. A lot of times it's not just savings, they'll actually invest it in a mutual fund or something like that. And so something like that, like the small action I would take, Matt, is just I download an app. Or, what we talk a lot about when people are they're ready, they're motivated, they're listening to this podcast and they're 80% sure they want to take action. It's now to deconstruct your vision, reverse engineer your vision down to a number of, I like to use 12 steps. If I was going to do, I want to be a better investor by the end of 2023, I would start to say at the top, hey, here's where I want to be. And I'd start to deconstruct it down to, hey, what are 12 steps what it might take to get there? And we do that because we like to function in quarters, so quarters have 12 weeks. And so creating a vision around something is really important for me. It's really important for investing. And once you have a vision, then you just have to do the steps. You just have to walk it out. You have to take a step each day. And I know people that literally have visions that get really clear. There's an awesome book called Vivid Vision. And they create visions that literally have 365 steps. So they know exactly when they wake up what step they need to take each day. I mean, when it's that clear, you guys can't fail. And so back to the repeatable action piece, Matt, I think that was brilliant because we can trick ourselves into being good at this. We can fake it till we make it, in a sense, by having automatic transfers and things like that. And also brilliant counsel on accountability. What if you do this with someone? What if you do this alongside someone? What if you have a monthly repeat? What if your one small step was setting a monthly meeting to call up your accountability partner? And you might not even take any steps, but you know that on the 1st of May, you're going to call your accountability partner. They might even not know you're calling yet. And it's like, hey, this is our actual money appointment. I'm supposed to talk to you about money and how we're going to be better savers by the end of 2023. We're going to talk for 15 minutes, right? One little step.
Yeah, I love it. My wife and I do that. We have a meeting once a month as well. And we look at our finances. And as you're suggesting right now, automatically 30% of any top line revenue that comes in from my business, this is revenue. Before I even pay cost of goods sold, before I pay any expenses, 30% of revenue goes straight to savings. Because I don't want to be stuck with this tax bill at the end of the year that I can't pay and get stuck behind the tax man again. I did that for 18 years. Never again. So step one is automatically 30% revenue goes off top straight into a tax account. Step two, 10% after my cost of goods sold and all of my expenses go out, 10% of what you might call that, you might call it net profit. 10% of that goes straight into savings. So those are two filters that we use that are two habitual things that are serving us in the savings game, in the investing game. For me, it's about two things. It's being a part of several mastermind groups. I invest in myself, investing in myself to keep learning, growing, and being around good people I can learn from. So I'm never the smartest person in a room, right? So that's number two. Number one on investing. I'd say the number two on investing is that I want to have each and every year some physical investment that I make. Last year, it was an investment into a podcast that I started, which, by the way, is now a top 2% podcast. Love to have you on it, Kyle, by the way. I'll send you the link later. So that's going to be good. But that was last year. This year, my first book comes out in December, and my new mastermind starts in August. So investing in some type of additional revenue stream, that also kind of ties into making, right?
Yes.
So it could be investing in your first property. Yeah. It could be investing in your first course at Passive Income University, but investing in just one thing each year for me has been crucial, right? So I think those are a couple of the habits that my wife and I deploy that are helping us to save and invest.
And in creating a abundant money mentality, what is abundance? What is abundance? It's when you have this mindset that is absent of fear. You're making decisions out of merit. And how do you create that? Well, I think we're touching on it so much because what's underrated in business, what's underrated in sales, and what's underrated in money is momentum. And when you talk about making small wins, tiny, tiny small wins, if anybody's a sports junkie out there, you know that you don't sink the game-winning shot on the first play of the game. You literally make a good pass, and then you make a good cut, and then you start making baskets. And all of a sudden, you're in a position where you're shooting the game winner and it's in the championship, right? Like, these are all same tactics for money. And so how are we creating this mentality? It's just that slight edge of good decision after good decision and tying them together.
I love it.
And Matt, the one thing that there's a fifth pillar that we didn't talk about. And it's something, I don't know where you're at with it. I always like to ask anybody because I think it's not an obligation, but there's a fifth pillar, and it's earning, spending, saving, investing, and giving. Giving is something that I had no idea about when I got into the business world. And in fact, it was scary to me. I didn't even know how to give, as stupid as that sounds. Do you just write a check, give money? But what I put myself around givers, and what I've experienced in having the ability, and not even the ability, because when I started giving, and this is an encouragement and a prompt for some maybe, I was in the place where I didn't actually have enough to give. That's what I said to myself. But I had, when you think about us as Americans, anybody that makes any sort of money is in vastly better position than many around the world. And so I started down the path of giving a percentage of my money. And all I want to say about it is it's drastically changed my life. And I don't know if I'd like you to touch on that too, if that's something you've experienced or even seen or talked about with your clients.
So I'm gonna talk about this, and I don't know how people are gonna take this because my view is slightly contrary to what you shared. I feel great about giving away money. I certainly don't give away a percentage, a certain set percentage every year, but I give away five figures every year. I'd say the most I've probably given away in a year is about $50,000, right? I'm still anxious about giving actual money away from that. I would say this though, where I love to give is I love to pour into people. I love to give a
Mm,
lot of extra time to the people around me by coaching, mentoring, guiding, counseling them on their decision making and on their habits and thinking. So I would give some in terms of money. At the same time, I would give even more in terms of the time that I give back. I'd say one thing that I always do whenever I go out, we have season tickets for the Charlotte FC soccer team here in Charlotte, and I took my three daughters with me. I always put $100 in my pocket in tens and twenties. So we walk by a number of people that are begging on the street on the way into each game, and I make it a goal to give out $100 every time I go out downtown. I didn't do that when I was single because I went out every night. But now I might go out like a couple times a month. We don't go out very often, so I'll probably give away $700 to $1,000 a month just to random people. That's not going to be a tax advantage. It's just giving to see if I can help someone that might be down their luck that I run into. Right. So that might be my way of giving, a little bit different than many. We don't tithe like 10% of all earnings to the church or anything of that nature. We do give some to the church, but I don't give 10%. We do give to charities that we're passionate about, and I hand out money on the street, and I give a lot of time. I certainly feel great in doing
mm.
that, and it's helping people out. So giving is also a pillar. I'm glad you brought that down as the fifth pillar, because I didn't think of that on this conversation again until you mentioned it. So we do give, uh, yeah, quite a bit actually. We give.
And it's because of the mentality piece of this podcast episode, because the psychological effect of giving is what surprised me. And it
Mm.
was because it's hard. It's terrifying. You work so hard for this money, you want to keep your hand you're closed on it.
Yeah.
But you really can't let abundance flow into your life until your hands open up and you
Yes.
realize that it's not yours and it's passing through you. And I
Yes.
remember the first small gifts, and I was rating myself as small gifts, but I remember understanding the impact of filling a need and having that ability. And by the way, one of the tactics I use for giving is to put it away automatically. And then when it's there, it just piles up. And when I give it, it feels like it's not even mine. So that was another
Yeah.
way I kind of tricked myself into, but then listen. And I tell you what, it made me a better listener for when there's a need out there and knowing that I can fill it. And then understanding, there's a quote out there that says, anybody that says money can't buy happiness hasn't given enough money away, because they understand the joy that comes from, if somebody's really wanting money or needing money and you know that you can fulfill that need, it's a really cool partnership that you can form there. Yeah.
Yes. Strongly agree with you on the idea that when someone says money can't buy happiness, they've never had it.
Mhm.
Because if you give away, it certainly is a feeling to help other people. So I'll agree with you on that for sure. I like to share one last thought on this subject. It might be a cloud or a circle that goes around all five of the pillars here. And it might be so simple, might be cliche. So antennas up, friends. The simplest way that I found to have an abundance mentality with money, just want less
Mm.
stuff. And you see me, we see each other at some of these front row dad events, and I love being a part of that. It costs a little bit of money to get to these events. If you ever see, like, I don't wear name brand stuff. I don't care about any of that stuff. I've don't don't really have a whole lot of extra fancy stuff. I don't try to keep up with the Joes. I don't care about that. If you look around our home, I have an expensive bed, and I have some cool equipment here for my TV setup and my office setup. Around that, I've got 9 shirts. I've got 4 pairs of shoes. I've got 10 pairs of pants. So all told, I have 23 pairs of clothing that are shoes, pants, or shirts. Consider that. And by many people's standards, I don't say it to flex or anything. I'd say that we're rich. Rich. Why?
Mhm.
Because we don't have a want for much. That's what
Mm.
makes someone truly rich or wealthy, is that you have the things that you really want, you have the things that you really need, and you're satisfied with that. So if you want more of the abundance mentality of money, I'd say one other way to get there might be to want less and be
Wow.
satisfied with what you have. Because we don't look at that angle very often here, especially in
That's
America
it.
nowadays. So something to
That's it,
consider.
man. Very cool. Very cool bow tie there, Matt. I want to hit you with a couple quick hitters because you're a guy that's in personal growth. You're working with people. I want to try to give our audience tools and things, takeaways. What's one app or piece of tech that you recommend that's improved your life greatly?
So an app and a piece of tech that's improved my life greatly. It's real simple. It's Zapier, Zapier. It's an app you can use to automate things in your business and buy back time and money. So that's one thing to consider. Imagine every single process that you might take in your job every day, whether you're an owner, your employee, instead of taking 1 to 3 minutes to do that one task, you can automate it. Well, that's what this app does. So there's a lot of different email processes that instead of me having to do it over and over again, I just have it automated. So Zapier is one.
Cool. That's amazing. That's amazing. What's a recent read that you really like as a person that reads and has a lot of books in your background?
All right, stop me when it's time to stop. I'll go with one for every owner out there who doesn't have a balance sheet yet, who doesn't have a profit loss statement. They just want to out earn everything. Here's the place to start your financial education. Simple Numbers, Straight Talk, Big Profits by Greg Crabtree. It breaks down, here's how to read a financial statement, here's how to start one, here's how to keep it simple if you don't know what you're doing. And it's okay if you don't know what you're doing because you're not alone. That's one. If you're more advanced and you want to learn about investing, my friend Justin Donald has this book, The Lifestyle Investor. It's a little more complicated and advanced, but he actually makes investing sound simple. He makes it sound simple through a lot of case studies and a lot of extra value adds that you can get through his website and through his podcast. So that would be two. And then the last one that I would add is there's a book I've read recently and it's back there. I'm able to reach it right now. It's called The Road Less Stupid by Keith Cunningham. It's chock full. It's got like 50 chapters, and all of them are 3 to 5 pages long of 50 different life business lessons that can help you to successfully make it in business. So those things help. Even if you're a
Awesome.
W-2, you don't own your own business, that thinking in that book can help you no matter what level you are, if you're an employee or an owner. The Road Less Stupid.
Amazing. Great suggestions, man. I got them down. And I haven't read any of these. I'm loving it, man. So, Matt, thank you so much for being on. I want to know how people in the audience that have listened to this can find you, learn more about what you do and what you got going on. I know you've got your podcast as well. So, give us kind of some hints on that.
Well, you can find me at the Eternal Optimist podcast. It's top 2% podcast worldwide. And we tell stories about people that want to share the hardest stuff they've been through and then share what they're doing in the world now to spread hope and to spread positivity. And that's one. Another is to find me on Instagram or Facebook at Eternal Optimist Podcast. I do a live stream Monday through Friday at 7 a.m. Eastern every day for 10 to 20 minutes. And we riff on how I'm growing the business, how we're adding value in the world, and how you can switch that mindset from victim and play offense for yourself. And last but not least, I've got a mastermind group coming up soon. And from someone who has had over 300 people I've coached in the last 9 years. So far, I've only been fired twice. And I've had 2 other people leave me as clients that I didn't originate, and they were handed to me originally, right? So a total of 4 people have left in that time before our agreement was over with. And I had to keep clients. I had to serve them at a high level. The mastermind is going to be about wow, exceptional customer service and how to acquire clients at a high level and how to wow them and turn them into raving client fans. That's coming soon. So feel free to follow me and connect with me at any of those places that I mentioned on Facebook or Instagram. And heck, if you look up my name, there's only 13 people in the whole world that have my last name. I'm related to all of them, and I'm the only one named Matt. So check out Matt Drinkhahn, and feel free to reach out. Love to connect with any of you.
Amazing, Matt. Well, it's been good to get to know you more, man. We've been a Front Row Dad brothers for a while now. We're pickleball partners, bag toss partners. We're going to get our championship one day. And I appreciate the energy and intention you bring to your clients and mostly your family, man. I know how you are with them and your girls. So I'll end the episode asking the audience, what I always do. What's one small win action step you can take based on what you heard today? Do not wait. Do it before the podcast ends. The extro's coming up here. Outro, that's what I want to go with. Action is key, you guys. And if you're currently on your passive income journey, reach out to us. Tell us your story. We love to hear them. We truly believe that we can accomplish financial freedom better together. This has been another episode of the Passive 25K podcast with Kyle Reedstrom. If you liked what you heard today, I encourage you to subscribe to our YouTube channel and like this video so we can get more of these conversations out to people that are curious about starting their passive income journey. And if you are thinking about starting your passive income journey, the next steps are to go to our website at p25kg.com and hit apply. This will get you into our application to join our community called Passive Income University, where you can learn everything there is to know about starting and completing your passive income journey. Thanks again for tuning in. I'll catch you next time for another conversation on the Passive 25K podcast.